Hey everyone, let's jump right in. Look, Lumentum's massive 90% revenue growth is grabbing all the headlines right now, but you can skip their 2-hour earnings call because I've already dug through the whole thing. In this explainer, we're uncovering a hidden 30% supply bottleneck that is quietly handing Lumentum absolutely unprecedented pricing power. By the end of this, you're going to have the exact high-value investment insights the broader market is completely missing about where AI infrastructure is actually heading.
So here's our roadmap. First, we'll look at the AI optics boom. Then we'll break down that massive supply bottleneck. After that, we'll reveal their secret margin driver, do a quick breakdown of the financials, and finally, look at their multi-billion-dollar future. Let's get to it. All right, Section 1, the AI optics boom and their record revenue.
So the top-line takeaway here is just absolutely staggering, 90%. That's Lumentum's year-over-year revenue growth for Q3 of 2026. This explosive growth, it's basically being driven by an absolute surge in demand for their optical transceivers and laser chips. And the sheer scale of this jump is pretty wild to see. Q3 revenue hit a record-breaking $808 million. Basically, this massive quarter is completely fueled by relentless AI demand from the big hyperscalers. I mean, the data center build-out is just moving at breakneck speed right now. But here's the thing you really need to take away from this. This record-breaking demand, it's actually only half the story. Which brings us to Section 2, the massive supply bottleneck where demand outpaces supply. Okay, so here's the real thesis. On one side, we have this insane hyperscaler demand for ultra-fast 1.6T transceivers. But on the other side, a really severe supply gap. Lumentum is currently facing a greater than 30% supply deficit in some absolutely crucial components. We're talking specifically about EMLs, which are essentially high-speed lasers and pump lasers. The market's appetite for new AI infrastructure is literally infinite right now, but Lumentum's top-line growth is actually being capped by these severe component shortages. Management actually hit the nail on the head during the call. They said, demand is not the problem, supply is the limit. So what's the so what for us as investors? Well, counterintuitively, this massive bottleneck is actually a highly bullish signal. It hands Lumentum immense, basically unprecedented pricing power. They're actively out there signing long-term agreements where customers are literally prepaying or co-investing in CapEx just to secure future supply. When your customers are that desperate and you control the bottleneck, you hold all the cards. And that leads us perfectly into Section 3, the secret margin driver, which is their scale across architecture. Now, listen up, because this is probably the most critical, under-the-radar tech insight from the entire earnings call, and the broader market is totally underestimating it. We've all heard of scaling up and scaling out, right? But Lumentum is capitalizing heavily on what's called scale across. Let me break this down for you. Because hyperscalers are hitting hard physical limits on power and space inside single data centers, they are now forced to distribute their AI clusters across multiple data centers. This scale-across architecture requires insanely high density, high-speed optical interconnects to keep latency near zero between these separate physical buildings. And these scale-across connections are exactly why Lumentum's multi-rail pump lasers have become their ultimate, completely sold-out margin driver. By the way, if you want to stay updated on the latest US stock market news and catch insights exactly like this one, make sure to subscribe to my channel. I upload new explainers every single week. Okay, let's dive into exactly why these pump lasers matter so much for the bottom line. Basically, pump lasers are absolutely crucial for inline signal amplification. When you split data across multiple rails to move it between distant data centers, you need more pump lasers to keep that optical signal strong. Since they're basically the lifeblood of this massive scale-across shift, Lumentum has incredible pricing flexibility here. In fact, management pointed out that pump lasers are currently their most severe bottleneck, even more than EMLs, with demand spiking super suddenly and significantly outstripping what they can currently produce. Let's transition over to Section 4, breaking down financials, margins, and profitability. So, what does this pricing power actually look like? Well, optimizing their product mix, meaning they're selling way more of those high-margin scale-across components we just talked about, along with a really strategic move into contract manufacturing, has driven some immense profitability. The non-GAAP numbers here just speak for themselves. Gross margin jumped to 47.9%, operating margin shot up to an impressive 32.2%, and EPS hit $2.37. They are aggressively exiting their low-margin legacy products and pivoting the whole shebang toward this high-margin AI boom. Actually, that operating margin jump really deserves its own spotlight. Plus 2140 basis points, that's a massive year-over-year expansion,
And management made it very clear that they still see plenty of room to grow these margins even further just through better factory utilization. Oh, and it's definitely worth noting on the balance sheet, NVIDIA's direct investment in Lumentum has helped swell their cash and short-term investments to a massive $3.17 billion. So yeah, they've definitely got the war chest to expand.
Finally, let's move to Section 5, their multi-billion-dollar future and long-term catalysts. So where exactly do we go from here? Let's map out the forward guidance. For Q4 of 2026, they're guiding for yet another record-breaking quarter, sitting at roughly $985 million in revenue. Looking a bit further out to the first half of 2027, they've already secured hundreds of millions of dollars in co-packaged optics, or CPO, orders. And looking slightly beyond that to 2028, that's when their massive new Greensboro plant comes fully online to handle all this exponential demand.
And these future catalysts, this is what could really supercharge the stock long-term. First up, they're sitting on a multi-billion-dollar backlog for optical circuit switches, which is heavily driven by major players, like Google, for example, upgrading their TPU architectures. Second, they are rapidly launching their new 1.6T transceivers next quarter, and those command a much higher margin profile than the older generations. But honestly, the real game changer here is that Greensboro plant. Management highlighted that this facility, once it's fully operational, has the potential to add more than $5 billion in long-term incremental revenue. That completely solidifies Lumentum as not just a simple component supplier, but as a dominant, long-term leader in AI infrastructure.
Which leaves us with a pretty critical thought to ponder after going through all this. Do you think Lumentum's 30% supply bottleneck is a bullish pricing signal, or is it a growth risk if they can't scale their manufacturing fast enough? Let me know your exact thoughts down in the comments. And secondly, which US stock or company would you like to learn about next? Drop your requests below, and I'll catch you in the next explainer.